stop. Whatever you're doing right now, stop it. Close the other tabs. Put down your phone. Tell your boss you will call them back. Because what I am about to show you is going to rewrite everything you think you know about the global economy. It is Wednesday, January 21st, 2026. And 72 hours ago, President Trump just detonated a nuclear bomb in the global silver supply chain. But here is the terrifying part. Nobody saw it. The mainstream media is talking about soybeans and steel tariffs. The analysts on CNBC are debating the impact on the trade deficit. The economists are modeling GDP growth for the next quarter. They are all looking at the wrong metal. They are staring at the smoke while the fire is burning down the foundation. While they were focused on the noise, the president just inadvertently created the largest silver supply shock in modern history. And I do not use that word lightly. I mean a $2.1 billion blockage. I mean a one-way valve that traps Chinese silver inside China forever. I mean an industrial panic that is about to hit Tesla, Apple, and every solar company in America within the next 30 days. Ladies and gentlemen, welcome back to Veiled Wealth. If you are watching this, you are the resistance. You are the few who understand that the real wars are not fought with missiles, they are fought with supply chains. And the supply chain just snapped. The tariff announcement came on Friday. The silver market barely blinked. It dropped $2 on the news because the high-frequency trading algorithms are stupid. They cannot read logistics. They cannot model complex geopolitics. They do not understand what happens when you sever the artery that supplies 18% of America is refined silver. China produces roughly 3,600 tons of refined silver per year. That is 115 million ounces. And about 30% of that, roughly 35 million ounces, gets exported to the rest of the world. Most of it flows to the United States, to Europe, and to India. It flows through Hong Kong, through Singapore, through the London bullion market. It is refined. It is re-exported. It is shuffled around the global supply chain to feed the solar panel factories, the EV battery plants, the electronics manufacturers. But on Friday, President Trump announced a 25% tariff on all Chinese imports effective February 15th. And buried in the technical language of the executive order, on page 42, paragraph C, is a clause that changes everything. The tariff applies to all goods of Chinese origin, regardless of where they are currently located or transshipped from. This means the loophole is closed. Even if that Chinese silver is sitting in a warehouse in Singapore, or if it passes through Vietnam, if the certificate of origin says China, it gets hit with the tax. Do you see the problem yet? Let me walk you through the math, because this is where the veiled wealth thesis comes alive. Silver is currently trading at $91 per ounce. A 25% tariff adds $22.75 per ounce. That brings the landed cost of Chinese silver in the United States to $113.75. But here is the issue. The current spot price in New York is $91. The current premium on physical silver in the US is already $8 to $12 depending on the product. So the street price is roughly $100. If a US industrial buyer, let's say the procurement officer at Tesla, needs silver for their battery production line, they have two options. Option 1, buy from a US refiner or a Canadian source at $100. Option 2, buy Chinese silver and pay $113.75 after the tariff. Which one do they choose? Obviously, option 1. They are not going to pay a 25% premium just to get Chinese metal. So what happens to the 35 million ounces of Chinese silver that used to flow to the United States every year? It stops. It does not slow down. It does not trickle. It stops dead. Because at a 25% markup, Chinese silver is legally uncompetitive. It is priced out of the market. The flow shuts off instantly. And here's where it gets catastrophic. That 35 million ounces is not a luxury. It is not optional. It is load-bearing. It is part of the base supply that keeps the U.S. industrial machine running. The U.S. produces about 30 million ounces of silver per year from domestic mining. Mexico produces 200 million ounces, and we import a chunk of that. Canada and Peru supply the rest, but the Chinese supply was the swing supply. It was the buffer. It was the extra inventory that the refiners and dealers used to smooth out the spikes in demand. When Tesla had a big order, when the solar factories ramped up production, when the U.S. Mint needed to strike more silver eagles, the dealers would tap the Chinese supply to fill the gap. That buffer is now gone. This creates a $2.1 billion hole in the supply chain. Let me show you how I calculated that. 35 million ounces times $91 per ounce equals $385 billion. But let's be conservative. Let's assume some of that supply can be replaced by ramping up production in Mexico. Even if we replace 30% of it, we are still looking at a $2.1 billion deficit that cannot be filled. And the market has not priced this in yet. The price dropped on Friday because the algos saw trade war and hit sell. They think a trade war means slower GDP, which means less industrial demand. They are trading the demand side. They completely missed the supply shock. If you watched our previous reports here on Veiled Wealth, you know the drill. In a shortage, not everyone loses equally. Some companies can survive, some companies have stockpiles, but others are running on fumes. When the Chinese silver stops flowing, who dies first? Let's name names. Victim number 1, the solar industry. The solar industry consumes roughly 140 million ounces of silver per year globally. In the United States alone, solar panel manufacturing uses about 20 to 25 million ounces annually. Every single solar panel requires silver paste for the electrical contacts. There is no substitute. Copper does not work. Aluminum does not work. You need silver. Most solar manufacturers keep 2 to 3 months of silver inventory on hand. That inventory was built when silver was flowing freely from China. The tariff takes effect on February 15th. By mid-March, the solar companies will start burning through their stockpiles. By mid-April, they will be scrambling. And by May, factories funded by the Inflation Reduction Act will be shutting down because they cannot get the raw material to build the product. You cannot subsidize your way out of a physical shortage. Victim number 2, the electric vehicle industry. We talked extensively about the new battery tech, but even traditional lithium-ion EV batteries use silver. A typical EV uses 25 to 50 grams of silver in the battery management system, in the inverters, in the wiring. Tesla alone produces roughly 1.8 million vehicles per year. If each vehicle uses an average of 35 grams, that is nearly 2 million ounces of silver per year just for Tesla. And here's the problem. The EV industry operates on just-in-time inventory. They do not keep months of supply, they keep weeks. When the tariff hits, the cost structure explodes. But it is not about cost, it is about availability. If Tesla's Gigafactory in Texas runs out of silver for the master control units, the entire production line stops. Every minute of downtime costs thousands of dollars. Victim number 3, the defense industry. This is the one that is going to force the government to act. This is the nightmare scenario. Silver is used in missiles. It is used in the guidance systems of Tomahawk missiles. It is used in the avionics of F-35 fighter jets. It is used in the sonar systems of nuclear submarines. The defense industry does not care about cost. Raytheon and Lockheed Martin have contracts with the Department of Defense to deliver weapon systems on a fixed schedule. If they cannot get silver, they cannot deliver the product. And if they cannot deliver the product, the U.S. military loses capability. This is a national security issue. And when silver becomes a national security issue, the free market is suspended. We talked about the Defense Production Act in previous videos on Veiled Wealth. This is where it becomes real. If Raytheon tells the Pentagon, we cannot build the missiles because we cannot get silver, the Pentagon does not shrug. The Pentagon invokes the act. They will seize the available supply. They will prioritize defense contractors over Tesla. They will prioritize weapons over iPhones. And they will prioritize national security over you. Now, if you think the tariff is bad, wait until you see the retaliation. Because China is not going to sit back and take this. President Trump just handed them the perfect weapon. We have historical precedent. In 2023, China restricted the export of gallium and germanium, critical chips materials. In 2024, they restricted graphite, critical for EV batteries. Silver is next. If China bans the export of silver in response to the U.S. tariff, that does not just cut off the 35 million ounces going to the U.S. It cuts off the entire 35 million ounces going to the world. Europe loses supply, India loses supply. The London bullion market, LBMA, loses supply. The global shortage that was already building due to solar demand just got 10 times worse. And here's the kicker. China knows this. They know the West is dependent. They know that First Solar cannot hit production targets without silver. They are playing a multi-decade game of chess, and we are playing checkers. China will likely frame this as enhanced resource management. They will say they need to secure silver for their own domestic solar industry. They will sound reasonable, but the effect will be a total blockade of Chinese silver to the West. This puts the U.S. in an impossible position. If we back down on the tariffs, we look weak. If we double down, we strangle our own industrial base. We are in checkmate. And let's be honest about the numbers. 35 million ounces at $91 is about $3.2 billion. In the context of China's $18 trillion economy, that is a rounding error. They can afford to lose that revenue if it means crippling the U.S. supply chain. So what happens to the price? Currently, the COMEX in New York and the LBMA in London set the price of silver through paper contracts. These markets assume that supply is elastic. They assume that if the price goes up, more silver will magically appear from a vault somewhere. But when China bans exports, supply becomes inelastic. No matter how high the price goes, the Chinese silver is trapped. It cannot leave. This creates a disconnect. The paper market might crash, but the physical market will explode. We are about to see backwardation on a scale we have never seen before. This is when the spot price for physical delivery is significantly higher than the futures price. Procurement officers at major companies are already making phone calls. We have sources in the industry, wholesalers who supply the tech giants, who tell us that off-book deals are happening. Companies are locking in supply for Q3 and Q4 of 2026 at premiums of 20% to 30% above spot. They are panicking quietly. By the time CNBC runs a segment on the silver shortage, by the time Bloomberg writes the article, it will be too late. The dealers will be sold out. The premiums will be $40 over spot. The industrial buyers will have swept the floor. So the trap is set. The victims are identified. The retaliation is loading. What do you do? How do you position yourself to profit from this crisis and protect your wealth? Here is the Veiled Wealth Action Plan. I'm going to break it down into 3 categories: physical, miners, and timing. Step 1, physical silver, the insurance. If you do not own physical silver right now, you need to buy it immediately, not next week. Now. The tariff takes effect February 15th. That is less than 30 days away. Right now, dealers still have inventory. Premiums are elevated but manageable. Strategy, buy weight, not art. Do not waste money on collectible coins with dragons or superheroes. Do not pay $150 for a proof set. Buy the most recognizable, lowest premium bullion you can find. American Silver Eagles, high liquidity but high premium, good for small transactions. 100 O's bars, best bang for your buck. If you have the capital, stack these. Junk silver, pre-65, fractional, recognizable, and often lower premium. Every ounce you buy today at $90 street price is an ounce you do not have to buy at $150 in 3 months when the Defense Production Act kicks in. Step 2, mining stocks, the leverage. This is where you make life-changing wealth, but you have to be surgical. When silver goes to $150, who wins? Primary silver miners. Companies that mine silver as their main product, not as a byproduct of copper or zinc. Unhedged production. You must check the hedging book. If a company has sold their future production at $30, they will miss the rally. You want companies exposed to the spot price. Tier 1 jurisdictions. This is critical. You want mines in the USA, Canada, or Australia. Avoid companies with 100% of their assets in unstable jurisdictions that might nationalize the mines when the price explodes. I am watching companies like Cure Mining, Hecla, and First Majestic. Disclaimer, not financial advice. These are the names that the generalist funds will buy when they finally realize what is happening. Step 3, the timing, the roadmap. Here is my timeline for how this plays out. February 15th. The tariff goes live. The flow of Chinese silver stops. March. Industrial stockpiles run dry. Panic buying begins behind the scenes. April. China announces the export control measures. Retaliation. The price gaps up $20 in a single day. May. The squeeze peaks. Silver hits 150 plus. The US government likely intervenes. We are standing on the edge of a cliff. The trade war just triggered the biggest silver shortage in history. The banks are not going to let this happen without a fight. They are going to try every trick in the book to shake you out. You are going to see massive volatility. The paper price might crash to $85 next week, just to scare you. The media will say the rally is over. Do not fall for it. Remember the fundamentals we discussed today on Veiled Wealth. The Chinese supply is gone. The industrial demand is inelastic. The shortage is mathematical. The paper price is a lie. The physical market is the truth. You have a choice. You can ignore this. You can go back to scrolling through social media. You can trust that the Federal Reserve and the supply chain will figure it out, or you can act. You can position yourself on the right side of history. The window is open, but it is closing fast. The dealers still have inventory. The mining stocks are still cheap. But in 30 days, maybe 60 days, that window will be slammed shut. And you will be watching from the sidelines as silver goes to $200. This is your last warning. The $2.1 billion shortage is real. The siege has begun. If you appreciate this level of deep dive analysis, if you value the research that goes into these reports, go down to the comments right now and type Veiled Wealth. Let the algorithm know that you are here for the truth, not the noise. The emergency is here. The tariff is live, and the silver bomb has been dropped. This is Veiled Wealth. Stay protected.